Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. While last week the attention was on the geopolitical turmoil, since then things have been calmer as the prospects of escalation decline. When it comes to markets, this week the focus would shift on the PMI numbers from US and Europe, but also on the PCE, which is the Federal Reserve's preferred inflation gauge. Morning, JK, how are you reading market sentiments after last week's roller coaster, and what narratives do you expect to play out this week?
Good morning, Swaraj. Yes, last week we actually started in the geopolitical events, and it while it calmed down in the middle of the week, again towards the end of the week we again started seeing a flare up. Although some denials from Iran about them being actually attacked and all that led to some sort of a de-escalation, immediate de-escalation. Nothing that things are back to normal, but at least for now there are no events that's happening or reported. But yes, it will be on the radar for quite some time now. Geopolitics it cannot vanish from our radars. But immediate focus now again shifts to central banks. We know that Powell last week also mentioned about having to delay the rate cuts. Not getting enough confidence from the inflation numbers, etc. Then there were focus on many of the ECB members, and the majority of ECB members now favor an immediate rate cut. Immediate in the sense June is where the timeline is. Although there will be some more data ahead of June, but the inflation development has been quite good in Europe, and economy still requires some support, although there are green shoots. I don't think the ECB president, though she was a bit hesitant to commit to a date when the rates will be cut, I think more or less leaning towards June. So that's one. On the other side, we had UK inflation last week that came slightly lower than expected, but not very low. But still, the Governor Bailey, as well as one more MPC member, Mr. Ramsden, both of them were actually quite dovish, and they indicated that the inflation will move immediately, or rather not far from now, into 2% target, and therefore indicating that UK will also be in a position of cutting rates in June. So what we are seeing is a diverging monetary policy. Japan, as we know, is still persisting with accommodative policy, though they moved out of negative to zero interest rates. We have BOJ policy this week. While don't expect a major changes, but there are some arguments that Japanese, and about the weakness of which they are at least overtly concerned, unable to do anything without its policy shift. So there might be some small tweak in the policy as well. Japan will not do any drastic change in their policy. No rate hikes, big rate hikes, or even stopping the QE, but there might be some tweak, and that can indicate that they are ready to meddle with the policy also, if that was required to see that the yen weakness is stopped. So that is something I'm looking forward to. So the overall picture is that divergence in monetary policy expectations from US versus others. So dollar remains strong, not overly strong, but definitely strong. Yes, on the yen, definitely it is at a 34-year high, and that is where the lot of concern is. And last week we had Chinese, Korean, and yen authorities also getting together. Not the Chinese, it's the US, Japanese, and the Korean authority getting together and agreeing to take measures to avoid excessive moves in the currencies. What action it will turn into, we'll have to wait and see if the market starts to sell these currencies once again. Yeah, otherwise Friday calmed down quite a bit after those denials from Iran, and we had yields which retraced higher after falling in the Asian time. There was some sell-off in the broader sell-off in the stock market. Dow recovered, but the Nasdaq and the S&P 500 were still down, mainly because the yields were also on the higher side. Also, there's a lot of focus on earnings report that have started to come in, and it gets thicker, from now onwards. Netflix was one which was pulling down the Nasdaq index quite a bit on Friday. On the overall dollar, yeah, I think it was mostly ranged. Yuan again tried to break higher on the dollar, tried to break higher, but again Chinese authorities were seen selling the dollars against the yuan as well. This week we'll have the focus on PC, as you said, which is expected to remain steady. Not a big jump is seen. In fact, no jump is seen, but we will always look out for surprises as far as the US inflation is concerned. GDP data will be the one day ahead of that. At 2.8% is where the market is expecting versus 3.4% that was recorded for Q4 last estimate. Still dominated by dollar strength. One thing to look forward to on the yield side, though, the yields are not breaking the big resistances. There's a huge amount of issuances that is coming from Treasury this week, as just 155 billion, split across 2, 5, and 7-year tenors. So these supply can again put pressure on the yields, and can actually support the dollar to some extent, at least against the low yielders like Japanese. And on the rupee, we did see some reaction to the geopolitical news on Friday morning, but calmed down quite fast. And particularly once the onshore market opened, RBI was seen selling the dollars, and it calmed down. And as day progressed, I think even the longs bailed out. That's the reason why we saw offshore market trade as low as 83.40 also. So we might see some more probe on the downside of the dollar against the INR, but I think it looks very well supported at 83.20, 25 levels. They are good levels for hedging near-term imports. At the same time, upside is well capped at 83.70. Thank you.
Thank you, JK. And one big narrative that we are catching up on is the shift in narrative in the central banker policy making. When it comes to US, Powell has been reiterating that a delay in rate cut is required. The data does not inspire confidence to cut rates immediately. While majority of the ECB members are in favor of a June rate cut, at least that's what it seems from the narrative. And when it comes to UK, even UK inflation was slightly lower than expected, but central bankers over there were quite dovish and confident about reaching the 2% target, and again a possible cut in rates in June. So that's some sort of divergence that we are currently experiencing. Dollar was mostly in a range, with Chinese yuan was controlled by the central bankers against sharp depreciation. When it comes to rupee, the offshore traded as low as 83.40, but it looks quite supported at 83.20, 25 levels. And as JK mentioned, those are good levels to hedge. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.